Assalamu alaikum, everyone. I hope you are doing well. Today is Wednesday, June 4th, and I'd like to talk to you today about a stock that has been on my radar, and I'm just seeing it go up and up and up. And I just wanted to give you my thoughts on it. And the company's name is CoreWeave. This is a company that's in the business of providing compute, GPUs primarily, and CPUs that are used for AI, and it has a, partnership with NVIDIA that gives it access to the highly sought after NVIDIA chips that really don't have a replacement. And since its IPO a few months ago, it's gone from high 30s to $163 per share. So I'd like to take a deeper look at this company and see, is it overvalued or not? So without further ado, let's get started. So this is the graph for the stock price, and it, as you can see, since April, so 2 months ago, it is up 360%. It ended up bottoming uh, mid-April after the tariff scare that we got. And since then, as I mentioned, up 360%. So what's going on here? So if you look at the most recent quarter that they reported, 982 million in revenue. Revenue growth was 420%. By the way, interestingly, their interest expense growth was over 500%, but that's not on the slide for obvious reason. Revenue backlog, in terms of things that were ordered for them that they plan on delivering in the future, that was close to 26 billion. The operating income margin, 17%. The net income loss is negative 15%. And they're shelling out cash like there's no tomorrow in order to invest in more and more data centers. And in the last quarter, that was around 2 billion. And by the way, this is a company with a market cap now, after its most recent share price, market cap of close to $80 billion. So just to put these numbers in context, quarterly revenue of close to $1 billion, market cap $80 billion. Net income margin is negative. Now, their revenue backlog has grown. So if you compare their revenue backlog in Q1 24 versus Q1 25, it went from 15 to 25. So let's assume a similar growth rate. That puts us at between 35 and 40, basically, next year. So assuming the same growth rate next year, we get to something between 35 and 40. And again, that's for revenue. That's not for income. That's not for cash flows. That's for revenue. Top line is what we're talking about. And it's trading at $80 billion. And fundamentally, what we're talking about in terms of compute, yes, the chips that are actually producing the compute are quite proprietary, and demand for them far exceeds supply. This is actually very true. So in that sense, what they're delivering is not a commodity, but compute itself is a commodity. In that, you either have it or you don't. There are chips that are more efficient than others, more powerful than others, yes, but compute itself, which is what this product what their main product is, that is a commodity. And if you want to see their growth in terms of quarterly revenue, that's at around 420% year over year, so nothing to scoff at. Obviously, they were at 189 last year. They're at close to $1 billion, as I mentioned, this year for this quarter. And something that they have, I think, that reflects positively on them is that the percentage of individual insiders who own the company is quite healthy, so close to 30%. That is always a good sign. I like to see insider ownership being very uh, high because that means that insiders actually believe in the company. It means that there's an alignment of interest between the people who are making company decisions and the public equity holders. Now, if you look at the estimates for free cash flow, and I always say, when you own a public equity, you should think of your ownership decision as a the same as if you own the entire business. So if I were to offer you a business, your top of mind for you, that is, I wanted to sell you a business, top of mind for you would be, how much cash is this business going to give me over the foreseeable future? And in terms of free cash flow, this company is not expected to produce any of that in the next 3 years. It's just going to be needing more and more cash in order to fund its expansion. So if you look all the way out to uh, December of 2027, their free cash flow is estimated to be negative 2.3 billion. In 2026, it's estimated to be close to negative 20 billion. So I have an asset that I want to sell to you for $80 billion. And I tell you, this asset is not going to produce any cash over the next 3 years. In fact, it's going to require cash to the tune of close to $25 billion that you'll need to feed this asset over the next 3 years. Are you a buyer? Are you interested in buying this asset from me? It costs 80 billion. It's going to need another 25 billion over the next 3 years. It's not going to generate any cash for you during this period of time. Are you interested? I suppose you could ask, well, what is it going to generate in year 4 and 5? Sure, but in this day and age, are you really that comfortable making predictions about years 4 and 5? Do you really know what the world's going to look like 4 years from now, 5 years from now? Can you really make a high enough conviction prediction of what the cash flows are going to be 4 to 5 years from now? Do you know the competitive landscape that well? Are you that sure that no one is going to eat into their business, that the demand landscape is not going to change from what it is right now? Are you that sure that no one's going to execute as good as this particular company is going to? And therefore, are you willing to put this type of valuation on this asset, $80 billion? And that's really how you should think about it as an investor. At least that's how I think about it. And the answer to me is plainly no. I wouldn't buy something for $80 billion if it's not going to give me any cash over the next 3 years. It's going to require from me between 20 and $30 billion in additional investment. And who knows what happens in year 4 and 5. Why? I mean, there's, I think, much more clear opportunities out there in the market. I mean, the best case scenario seems to be that I didn't overpay. That's the best case scenario, not that I underpaid. That doesn't even seem like a possibility at this valuation. So I actually ran the numbers here, and I tried to figure out like what type of assumptions do I have to make in order to justify its current valuation. So if if we go with the free cash flows being zero, years 1, 2, and 3, I'm looking into the future here. And then let's assume year 4, all of a sudden they're at $2 billion in free cash flow. And then after that, it grows 30% every year until we reach year 10 in the future. 30%, that's very aggressive. And then let's assume that the company grows in perpetuity forever for 2.5%. And using the weighted average cost of capital that the company currently has, and by the way, that's very liable to increase. Let's use the weighted average cost of capital of 10% and discount all those cash flows to today. We come out with an enterprise value of 67 billion. And then since we have net debt here of negative 10 billion, we have an equity value of 77 billion. So the intrinsic value per share here is $161. The current price is $163. So you'd really have to assume something. You'd really have to assume the best case scenario to come out with today's valuation. And that leaves no meat on the bone. That leaves nothing left for stockholders. And so I just thank God that shorting is not halal, because I would have shorted this stock a while ago, but the markets can remain irrational longer than you can remain solvent, as the saying goes. And so this seems to me like an asset that's overvalued. At least it seems to me like something that I definitely wouldn't touch. I can say that much. I mean, maybe something astonishing happens in its outlook, and all of a sudden, the valuation that it's sporting today is justified. But as far as I can tell, with its current valuation, I wouldn't touch this thing. And I always like to say this: when you're investing, ideally, you don't even have to do a discounted cash flow. Like the opportunity is so obvious, you don't really have to do something cute like a discounted cash flow analysis and plug in numbers. Ideally, it's something like, oh well, here's a company that makes $2 million in income. It has $2 million in cash on its book. It has $2 million in assets. Will you buy it for $6 million? And sometimes you come across opportunities like that, in which case, you back up the truck. That's really the ideal opportunity. But something like this, it's not something that I would be interested in. So, CoreWeave can continue running up, but I'm not going to be touching it unless something in this analysis changes. All right. So before I wrap up and go to questions, a friend that I trust actually shared this with me. He knows the person in question. This friend of mine is a doctor at a Veterans Affairs hospital, and one of his patients actually did Shahada, and then later was diagnosed with cancer. And because of some red tape, his cancer is not going to be covered. Don't ask me. Healthcare system in the United States is crazy. So what I'm asking, I asked from the community in Discord, and I'll ask you here, is the goal is 20,000. We're already close to 12,000. So I'm hoping the generosity of this community can get this person to 12,000, take care of these bills for him, and inshallah, he can focus on getting better. So the link to the campaign is in the description of this video. And I think given the times that we're in, coming up on Eid al-Adha, this is a perfect time to do something like this. So check it out if you're interested. And with that, I'll go to questions. Can you suggest any good index fund? Yeah, become a member of PIF and follow our investments. Hamid Amir says, Salam, brother Rakaan. Wa alaikum salam. Hamid, do you think Tesla will start moving after Robotaxi event? I think the negative sentiment is an opportunity regarding Tesla, and we keep being given more and more opportunities. And I think the inevitable will happen with Tesla, which is that it's going to have its ChatGPT moment similar to NVIDIA, and it's going to go on a pretty strong run in the years to come, inshallah. Salamat Ahsan, I see you. Yeah, sorry I wasn't able to go live yesterday. A bit worried about Elon and Trump. Yeah, to be honest, I mean, you can think of what you want about Elon and the actions that he's taken. Fact of the matter is, I think the guy is genuine. I think he speaks his mind in most cases. And so he's genuinely concerned, I think, about the spending bill, as he should be in the United States, and we can't really afford it. And so he's speaking up about it, even though he has nothing to gain from it. People are going to say, oh, well, this is because they took away the EV subsidies or something like that. And these people don't know what they're talking about. EV subsidies being taken away actually benefits Tesla because Tesla's the only EV company that can make it without them. So it will likely concentrate the market even further in the hands of Tesla. So their market share should actually increase in the United States because of this move, all else being equal, that is. So I don't know what's going to happen between Elon and Trump. Obviously, I think that this has impacted the share price, but has it impacted the business? Has it impacted the number of people that are going to ride in robotaxis in the future? Has it impacted number of cars they're going to sell, the number of battery packs they're going to sell? Has it impacted the number of humanoid robots they're going to sell in the future? I think the answer is no. I believe CoreWeave is currently not Sharia compliant. Yeah, it's not Sharia compliant. That's why I didn't really do a deep dive into that company when it went public. Actually, their interest expense in the next quarter is forecasted to be between $250 and $300 million. Their interest expense. Keep in mind, this is a company that generated $1 billion in revenue. So their interest expense is out of control, and that's because they need a lot of financing, and they're going to need a lot more, and that's going to come through debt and dilution. Assalamu alaikum. Comparing CoreWeave and Nebius Group, would you suggest adding Nebius to our portfolio? Problem with Nebius is that I think they have like really strong ties with Israel. At least that's what I saw last time I took a look at them. Hamid says, Salam Rakaan, any comment on Uranium Energy Corp? Seems like things are moving towards nuclear. So Muhammad, actually things are moving towards solar. Solar will be by far the most common energy generation source of the future. Nuclear is going to play an important role in some aspects, but generally speaking, if you told me the energy source of the future, I think it will be solar. There are some opportunities, I think, in nuclear, but the further away you go from now, it depends on the situation. So, if you have a low cost mine that can, produce the thing at a lower cost than competition, then you basically have a license to print money. And if the valuation is correct, then it makes sense to make a move there. But generally speaking, the further you move away from the mine, and so downstream into, closer and closer towards actually value delivery, the fatter the margins become. Typically, mining is a really like bad business to be that close to, and so generally speaking, regardless of the commodity, I'd stay away from mining and look more into things that are not commodities, that are closer to value production. Yeah, please don't forget to like. Thanks, Ahsan. Appreciate it. Thanks, Hamad. I appreciate it. And yeah, make sure to get this campaign to 20,000, inshallah. Now is the time to do it. These are um, days that have a lot of barakah in them. May Allah subhanahu wa ta'ala add barakah and preserve the barakah in all of your lives. Thank you for being part of our community. Really appreciate it. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.